Tesla so far had an amazing 2025 with some political turmoil in the beginning when Elon worked with the administration, with the Trump administration. But now he's back at Tesla and the biggest pay package in history, $1 trillion on paper, is at stake on November 6th. So a lot of things are happening and people ask one question. Where are we with Tesla? Where is Tesla's stock going? Today we will take some time here to look into the model, into my valuation and prediction model, and go through all the major areas of Tesla, all the three big verticals, to see what the current status is and give you an update on the price target, but also of the underlying fundamentals. So let's get started with a look at the model to get a good overview over what Tesla actually is as a company. And I want to start this with this quick overview here to understand that Tesla consists fundamentally out of three major verticals. The first one is core, EV, and energy. These are the electric vehicles that we all know, the Model Y, the Model 3, the Model S, the Model X, and the energy business, which I covered in a specific video showing that Tesla's utility scale batteries, the mega packs, and more and more of them coming, are actually of fundamental importance for the US energy grid and the AI build out, because battery packs can actually replace peak energy plants and increase the peak capacity of the entire United States. That's when I realized this business is huge and there is not really a cap on the size of this business. It's supply constrained. Then the next big one is, of course, autonomy and robotaxi, including the FSD revenues from the cars that are driven by consumers. That is the exciting initial big mega boost to Tesla's business that I see coming over the next 5 years. And then finally, we have humanoid robots and Optimus as the third huge revenue stream. And we are going to go into the exact questions when which stream becomes very big. You can already see a quick preview here that core keeps growing nicely starting in 2026. And then robotaxi kicks in 2026, 2027, and by 2028 is bigger than the entire core business of Tesla. And then Optimus is creeping up while robotaxi is exploding. We're going to look at this in more detail. Before we do that, I want to take you on a little tour across these three verticals so we understand for each one what are the big topics that became important this year and will become important next year, and what does it all mean? Let's get started with the Model Y, affordable Model Y launch, and what actually happened. So here we will start with the United States right here. Very recently we had that important affordable model launch that was a game changer, or a perceived game changer, or an anticipated game changer for Tesla's core EV business. Because in Tesla's core EV business, it's all about one question: can we expand that market share of Tesla by introducing more affordable models? Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. And the importance of introducing more affordable models is so high because the total demand of these models is a function of how expensive a car is. The cheaper the car, I show you this, the cheaper the car, the more you can sell. And in cars, Tesla is right at this edge. Here you see the curve. Sorry, this looks a little complicated, but it's an interesting curve. Here you see the total percent of EVs of total market share. 100% means you can capture the entire market. And here you see the price of the cars. And Tesla is right here at 44,000, right here, with the most affordable Model Y before that new model was introduced 2 weeks ago. And as you can see, this blue curve shows you the demand, how much market share you can capture. And what you see is once you hit this $35,000 price limit, your TAM, your total addressable market, goes through the roof. It's actually 8-fold if you get it here. That means 800% more revenue for Tesla if they can grow pro-rata to their current share. That's all you need to understand. If they can shift the price down into these different segments, they can sell and massively grow. their market share. That is why this is not just geek talk for car geeks, but important. And so when this model came out, people were a little disappointed because here is the model we actually had before at $44,990. And this is the affordable model introduced. It's only $5,000 cheaper. And there was a lot of disappointment in the Tesla community and saying, $5,000, are you kidding me? I pointed out, and I did some more international research very recently, if you look at the affordable model in Germany, for example, and in other European countries, in France, we will take a look in a second, you see a massive, much bigger price drop than in the United States. For example, here, 40,000 euros, 40,900 euros for the affordable new model, while the previous cheapest version was 50,970 euros. So here, instead of $12,000 less, you got instead of $5,000 less, you got a drop of $12,000. And I made this point. We have to understand Tesla is a global company. Don't just look at one market. Always look at the three major markets of Tesla, which is China, the United States, and Europe. Long story short, to wrap up this segment, the first big segment of Tesla, EVs, Tesla does a tremendous job in being the world's most profitable and largest EV maker, securing that margin, and continuously pressing forward into the lower price segments. And with this launch, Tesla is in a great spot to further grab market share in Europe, in China, and the United States, which I translate, and here comes the TLDR for all you finance geeks. This translates for me into a model input of 15% core growth rate. So I'm modeling out over a long period, all the way to 2040, Tesla will keep growing in average. Its core business, outside robotaxi and Optimus, at 15%, which is a solid basic growth rate. There will be hiccups and lows. And this is the base model. So this is pretty conservative actually, but I think we are easily on track to delivering these 15%. Okay, now let's go back to the second important situation, robotaxi. What has happened with robotaxi and where are we at? And I want to show you one important thing here. Jonathan Stokes, he shared this. Look at this. What is happening with robotaxi? I will explain this here in a second. First, let's take a step back. When it launched in June, I observed that very closely and I came up with this theory that we will hit an inflection point of robotaxi autonomy around May 2026. And the inflection point is between 1,500 and 2,000 deployed robotaxis, because that will get us to 5% of free cash flow of the entire Tesla corporation. In other words, this is the point in time where the robotaxi new product line will deliver 5% of total free cash flow to Tesla on an annualized rate. And my prediction is when that happened, it is what I call a forcing function for all analysts on Wall Street and all institutions, because it forces them to understand that robotaxi will quickly overtake the total free cash flow of the core business. And that means once we hit this point, Tesla goes on a multi-year, half a decade or longer trajectory just through robotaxi of massive free cash flow growth. And that will drive the stock up to $2,000 to $3,000 very quickly. Okay, so what is this chart? I want to drill down into where we are at right before Tesla earnings in October 22nd. Where are we today? And I came up with this theory that now more and more people are taking over, that Tesla will actually do a seeding strategy with robotaxi. So Tesla will not go into Austin and just saturate Austin and then move on to the next city and deploy 2,000 robotaxis in Austin. No, that would make no sense. Tesla will go broad in the United States and even in Australia and other countries and seed very small amounts of robotaxis in many metropolitan areas to unlock the relationships with the metropolitan regulators, to learn about and map out these cities and make sure everything works, and do this in parallel so it can then start scaling all of these up. So instead of going deep in one city, they will go very broad. And now we are getting more and more evidence that my theory and prediction was actually spot on, because we see here all these different areas: Arizona, Phoenix, Mesa, Tempe, Los Angeles in California, San Diego, San Francisco, Oakland, San Jose, in Colorado, Denver, in Florida, Jacksonville, Miami, Orlando, Tampa, in Illinois, Chicago, Nevada, Las Vegas, New York, Brooklyn, Queens, and in Texas, of course, Austin, Dallas, Houston, and San Antonio. And for all of them, we see all these deliverables and milestones for robotaxi launch. Here's Tesla Insurance is available. The permit has been applied. Permit has been received. The vehicle operators ads. They're hiring vehicle operators, right? They've spotted LiDAR validation tests where Model Ys and robotaxis drive around and validate certain things, right? And then public test program is launched, geofence vehicle deployed, more than 20, and so on and so forth, fleet support specialists. And you see that all of these areas are now in preparation, with probably most of these areas that we see, and maybe some more, this year getting into the vehicle deployment phase. And we already have 4 areas deployed, right? So seeding is in full swing. And where we seed, we will harvest. That's the bottom line. So when it comes to robotaxi, everything comes down to this question. Is robotaxi a fantasy? Is autonomous driving a fantasy, or is it a real business? Are we talking about 1,000 Tesla robotaxis in 2030? Or are we talking millions? Are we talking about a few $1 million in free cash flow? Or are we then starting to approach $1 trillion in free cash flow? Of course, these are extremely decisive questions, and we will know the answer soon. But what I modeled in my model here, I can show you some things. And you can see it already in the EBITDA developments, right? That by 2028, we will have $16.8 billion in pure robotaxi free cash flow, which is much bigger than the entire company right now. So when we look at my projections, right, let's go into the robotaxi projections. What we see is I'm projecting that we actually will deploy 40,000 robotaxis in 2026. I will get to this in a second. And then from there, of course, we are scaling fast. 150,000 in 2027, 400,000 in 2028, 1 million, and these are fresh deployed. Here's the fleet size, 1 million in 2029. So we have 1.6 million on the road at this point. And in 2030, we are already deploying 2.4 million new robotaxis. So here we are in absolutely full swing. And the revenue is, of course, huge, right? So with here, we are basically seeing $100 billion in revenue in 2029. But the important thing is we have a massive, insane margin, because this is a model, CapEx heavy model. I just adjusted my model to account more for the CapEx when we talk about the share price in a second. That's why the numbers came actually down, because I accounted more for CapEx to own the entire robotaxi fleet. Get to this in a second. But as you can see, this is the decisive predictive bet we are making here, that the robo fleet will grow to 1 million, to over 1 million in 2029. And a lot of analysts are not even remotely factoring this in. They say, like, this is nuts. It's going to be a few, 10,000 maybe. I think they're wrong. And we have to understand why. Once you deploy something like robotaxi and charge under $1 a mile with no fixed fee, you will completely disrupt transportation as a whole. You will kill all rideshare. Of course, Waymo, but all Uber, all the rideshare is done. Then you will kill taxis. Then you will start killing buses and public transportation, because why would you take a bus for $3 if you can also take a robotaxi for $3 for 3 miles? You would even take a robotaxi if it's $4 compared to the $2 or $3 for the bus, where you get like murdered and stuff. So once we have an enormous fleet of available autonomous robotaxis at very low prices, everything gets disrupted. That is an important and very important core thesis of the central new autonomy vertical of Tesla. And if this is true, the total potential, if you really scale out into the future, I'm not even going too crazy here, but I believe by 2040, if Tesla nails this whole autonomy thing, they will have 142 million robotaxis deployed in the world, which is pretty conservative. That's 10% of today's automotive install base. So we have 1.5 billion cars on the road in the world. Here, I'm assuming a tenth of that, 147 million robotaxis deployed. And of course, Tesla would also have an enormous moat here for many reasons. Who can manufacture these things? I estimate the manufacturing price to be $15,000 long-term of the Cybercab, because it's a dedicated vehicle doing only this thing at enormous scale. 15,000, I think, is realistic, and that gives them enormous margins. It's a beautiful business. Now, I want to go to the last stream, the last revenue stream, and that is the humanoid robots. And I'm not going to go in this video too much into the humanoid robots. We want to talk about numbers, but the humanoid robots are a very, very big deal, because Tesla Optimus, who in my assessment leads the world in development right now, this Tesla Optimus robot will actually change and fundamentally transform all physical labor very soon. And I said this over a year ago now, 18 months ago, I had a video, I think, or like 16 months ago, where I made this prediction that humanoid robots are the biggest thing that ever happened to the labor market, next to AGI, maybe for white collar. And back then it was a little crazy opinion. Today it's more or less consensus among anyone who's any smart. Says, yes, humanoid robots are here. And they will absolutely transform the entire world. And it's insane. It's a 25, 30, 40 trillion dollar opportunity, because you can replace every single person and make it much cheaper and much better what they do, from agriculture to hospitality to mining to sending people to Mars. I mean, there is no limit. And once you drop the price of labor like this, you will see an explosion of demand, right? If you have currently 10 employees and you can replace them with 100 robots for the same price, you're probably going to buy 100 robots. So it's insane what's going on here. So this brings us, of course, to the question, like autonomous transport. Even the least visionary people agree, sure, it's true, but it's all pipe dreams. It's not happening. Now, what we see now, I had a video on this too. Let's get concrete. We see now that Tesla suppliers in China, all of that stuff is supplied in China because China has an advantage here. That what is leaking more and more from people in China who are suppliers, that there are more and more deals being signed for the actuators and all these little technology components that go into the robots. We have leaks from China that shows that on the minimum side, that is my assessment, on the minimum side for next year, Tesla is heavily investing CapEx to making sure they can manufacture at a minimum Optimus robots. And these leaks are very important because this is not speculation. This means the Tesla operations and financial teams are sitting there and spending real money on getting these suppliers up and running and securing these supply chains and putting in the orders. And if you know anything about large-scale manufacturing, you're not doing this if you don't plan to actually do this, especially not for next year, which is basically now. So what does it mean for us? It means that Optimus might be ahead of schedule, and it means that 2026, not 2029 or 28, 2026 next year could be the year where we start seeing large-scale Optimus production and deployment. And the first deployment is industrial, and the first industrial deployment is into Tesla itself. Elon made this very clear. Tesla could eat up to 10,000 of these robots internally to just boost their margins and do all kinds of magic stuff. But I also said it's pretty much guaranteed that once Optimus is there, even as a prototype, mass producible prototype, Tesla could sell hundreds of thousands of them to industrial partners who want to experiment with these things. So we are talking about an enormous business. And the way I reflected this is actually here on the Optimus sales projections. I'm actually very, very conservative, but now I changed the numbers a little bit and said 25,000 for 2026, which is very conservative, but I'm saying 25,000 2026. I'm saying 100,000 2027. And then we are going into 200,000 and grow this pretty aggressively to hit the first 1 million Optimus robots deployed in 2030. Okay. And then we keep growing because there is basically no limit, and we get to 1.6 billion deployed in 2040. And if you anticipate what these robots mean at scale, I think 1.5 billion, 1.6 billion totally deployed is also on the conservative side. And by 2040, we will have many, many more than that deployed, because the demand for these things is similar to AI. There is no limit to the demand, and it's violent demand. It's a real pull force. Once you can hire your employees for a tenth or a fifth of the price. I mean, it's game over. That's what it is. So these are the projections. And what does it all mean? I reveal now my current updated price targets. Where do we have that? It's right here. And what I did, why this dropped quite significantly from before, I was at, but it's still pretty bullish and aggressive. This is the base case. What I did here, it was before at 840 and it dropped to 700 effectively for 2025 for this year. 3 months left, 2.5 months left. These price targets, by the way, they include a risk discount and they are based on discounted cash flow. The risk discount is separately where I'm looking at the risk factors. So if you see this for the first time, you might think, oh, Joe, you're pretty bullish here, but I'm going to go into the other price targets in a second. In 2030, I'm coming down from 8,000 to basically 7,000. The reason why I'm coming down is actually just an accounting reason, because I had to account for all the robotaxi fleet actually being on Tesla's balance sheet, and therefore it has a direct impact, not on EBITDA, but on free cash flow. And this is a discounted cash flow model, so it hits the free cash flow, which is fine. I think it's realistic this way. And what do these numbers mean? This is the fair future value share price. So this is not my price target. This is not where I'm saying, oh, the stock market will decide to get it there. The way to view this, you can understand this if we go to the monthly simulations here. The way to understand this is it is a magnet. These numbers are the magnet, and the stock market can do whatever it wants, but at some point it's being forced towards this red line, because that is the true intrinsic value of Tesla. And in the long term, the stock will oscillate around it and not be constantly under this line. So here I broke this down a little bit. This is a live model that updates the fee. If this is the number in December, that the stock actually is fairly valued at 700 this December, 696. And we are now in October and the stock is at 430. Is it at 430? Let's see. I think I have a live ticker here. Yes, 430. That tells us, if we just draw the line to the fair value in 2024, that the fair value in October, as we are sitting here and speaking here right now, should be 640. It is at 430, which means we have a discount of 32% and the stock should be up 50% more than it is. So that's the discount you get. You get Tesla at a 30% discount, which is a pretty good deal, in my opinion. So that's how you should think about this line. And I use this model always to know, okay, how aggressive should I be exposed to Tesla? And I'm very aggressively exposed here. Now we have also the bull model and the bear model. I'm not going to go into that, but I think some of the assumptions here are realistic. Some are more conservative. And of course, they're all based on the one assumption that Tesla executes. So that's the status of the company as I see it today. Of course, it was very quick for a very complex topic, but the key takeaways are we have three major business lines of Tesla. These three major business lines will behave like this. Core business is driving, of course, the share price right now, or driving enterprise value. But in 2026, we will see robotaxi creep up to 1.4 billion free cash flow contribution, growing to 5.2 billion in 2027, and then exceeding the entire core business of 16.8 billion. So pretty massive and insane growth once robotaxi works. And 2026, in my estimate, is the inflection point year. Once we hit that, all bets are off, because while Wall Street might be not smart enough to see what we see right now, they will be forced to be smart enough to see this in 2026. Right? If we deliver 1.4 billion in free cash flow in robotaxi, there is no way around seeing this. And that is the big forcing function. Of course, that will massively impact the stock price. And that's the big picture. And the even bigger picture is that Optimus is coming then. So if you look at this, for example, here we are looking at 2031 to 2039. And what you see is that in that period, this is EBITDA, not free cash flow. In that period, you see that Optimus is overtaking robotaxi in 2036. A lot of people on X and other Tesla tubers, right, they're more skeptical about that than me. They're saying Optimus will grow way faster and outpace robotaxi way faster. I think people get it wrong. They don't understand how huge that robotaxi situation is. So the reason Optimus only overtakes robotaxi in my projections in 2036 is not that Optimus is weak. I mean, look at this. My projection in 2036 is that Optimus delivers $3 trillion in EBITDA and robotaxi 2.7 trillion. As you can see, I'm pretty bullish on Tesla. But you have to think in first principles about these markets. There are very big opportunities ahead of us. The entire global labor market, at least the blue collar part, and the entire global transportation infrastructure. Plus, in both cases, the enormous effects of dramatically decreasing prices and dramatically expanding the existing enormous markets. So people have to wrap their head around this new technological reality, embodied AI that Tesla makes happen. That's why I'm very, very bullish on these things. But it's important to model it all out so we know what we are actually talking about in terms of concrete numbers. So I hope that was helpful. Quick overview. We have to do this from time to time because this model updates, the news update, and I will keep you abreast of what's happening. Maybe once a month we do this holistic overview here. If you want to know what the future brings, go to pioneerlands.net. That's where we meet the brightest minds, the greatest pioneers. We have over 4,000 people there now. We're discussing the future of Tesla, but also the future of AGI, our society, of other stocks, of Bitcoin, NVDA, AMD, Broadcom, Ethereum, MicroStrategy, and all the other exciting things. So go there. I hope to see you soon, and I hope that was helpful.